Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from hundreds of successful individuals from around the world. I am your host, Ashutosh, and today I'm privileged to welcome a very, very successful entrepreneur from India, Mr. Anshuman Panwar. Anshuman, welcome to the show.
Thanks, Ashutosh. It's a pleasure to be here.
Thank you. Anshuman is the co-founder of Creditas Solutions. So Anshuman, let's talk about Creditas Solutions. Tell me about this venture and what you do.
So we started this venture about 7 years back. The sort of genesis of the idea came from a previous sort of experience, wherein I and my co-founder were working in the UK with a hedge fund. This hedge fund was essentially investing in highly distressed consumer assets in the UK market, which what it essentially meant was that we were going and buying defaulted credit cards, personal loans, auto loans in the UK market of both high street banks such as HSBC, Lloyds TSB, Barclaycard, Citibank, etc., as well as subprime lenders there. And one of the things that we sort of realized, having worked there, was that if one looks at sort of debt collection, so to speak, it's an industry which has not really changed too much from the times of left kneecap or right kneecap, take your pick, and it's an industry which has not really seen advent of technology as such. Okay. So we thought that that it seems to be a good sort of a business to start. Also, collections, if you look at it, it's probably as old as, since the first time cavemen decided to exchange stones, right? So there's always credit there, and collections is an essential part of it. Just that it sort of is looked upon as something which is sort of the grimy sort of a side of business, which, yes, grimy CV it is. But we said that, hey, there's a better way of doing the same thing. And so, yeah, that was sort of the genesis of the idea. It's sort of, for us, we learned a lot in the UK. Thankfully, we never had exposure to debt collection in India because that's a different sort of market altogether. And the idea was to essentially take our learnings from there and sort of deploy technology to solve for this solution, so to speak.
Fascinating. And, you also developed a proprietary collections platform.
Yes.
That I think you are, working with bankers and borrowers. Talk to me a little bit about what happens in this platform.
Yeah. So essentially what we have developed is, if you look at, so maybe I'll talk about the broad themes we have for the business and what we sort of look at what will happen in the sense. So when we started the business also, one of the key things for us was, and I'm going to quote Wayne Gretzky here, that it was, for us, it was never, as he would say, it's not about going to where the puck is, it's about going to where the puck is going to be. So for us, we have always sort of looked in the future and said, hey, we need to sort of solve for things which will happen in the future. Now, from a collection sort of perspective, there are 2-3 things which are sort of broadly there that we see are going to change fundamentally. First of all, the way collections is sort of being done, it is essentially manual in a sense, right? Completely manual. You need to have either a field force or a field agent who will essentially go knock on your door to collect money, or maybe a telecalling agent. Ultimately, it's a human sort of voice or a warm body there. Our view to that is that essentially, if I were to sort of take this 5 years down the line, with technology having advanced as much as it has, and the way it is sort of evolving and advancing even now as we speak, to say that all of this and this particular industry, which is because this interaction itself is extremely frictious, right? On the one hand, you have a collector, right, who, or the bank or the lender, who is just incentivized to take money, and effectively even the collector itself is not a salesman, right? He has essentially a pressure target from his boss. So his simple thing is to go and take money, right? Whatever it is. On the other hand, you have a customer. I think one of the big, I would say, perceptions about the business, our collections as such, which is wrongful, is that you have to solve for morality. Whereas in reality, what you need to solve for in collection is to solve for friction. What I mean by that is, if you look at morality, then everyone assumes if you've not paid me, then there is obviously a sort of he's a willful defaulter. There is an issue. There's an intent issue as such. But if you were to look at collections and any portfolio that you pick up or across banks, lenders, across the world, whether it be India, UK, US, anywhere, what you will figure out is that from a willful defaulter perspective, only about 15% of those customers who are in those pools will be customers who have just paid 3 minimum installments. That's it, either 0 to 3. Almost about 75% would have made 6 consecutive payments and then gotten into a default. So essentially, it's not an morality issue of the guy having taken a loan with an express intention to default on it. It's essentially a circumstantial issue. To solve for that, you have to solve for friction in that conversation. You need to basically provide solutions to the customer. Now, the way it's traditionally done is you'll have some collector at a, in an Indian context at a 15,000 rupee, or even internationally, collectors are pretty much the lowest of the lowest rung, right? And he's not incentivized for anything except taking money, not to empathize and stuff. And that conversation itself is frictious. Whereas if you sort of take the human element out of it, you give a customer an option to interact digitally to cure for it, it will lead and yield better results and better outcomes, is our belief. We have sort of demonstrated it over the last 7 years of our existence as well. And that is why I think banks are now also sort of saying this is the way to do it. The other sort of big thing from a collections perspective, the last one that I will talk about, is that if you were to look at regulators, and this is something that we have seen the world over, the regulatory winds are always going to be unidirectional. They will always be pro-consumer. And rightly so. We are seeing that in India as well, and we've, in our experience, seen that in the UK in the past as well. And the regulators, we will simply be, hey, once you've given a loan and underwritten a customer, you've already priced for default there, right? So you better sort of treat your customers fairly and with respect. So I think this is something which is inevitable. And we've sort of we're trying to solve for it. Let me put it
Fascinating. So, from a customer perspective, and in India now, credit score is becoming very relevant. It used to be critical in the US, it still is. But what goes into measuring a credit score?
So credit score is essentially nothing but let's say a history of one's behavior with credit that one has taken, essentially. So what credit score, essentially, the underlying component of a credit score is the credit lines that the customer has accessed and how he has performed on them. In layman's term, what that means is if you've taken any personal loan, any credit card, any consumer durable loan, any loan whatsoever, including mortgages or a credit card, they are mandatorily reported to the bureaus by the Circa Act in India, and all over the world there's a bureau which compiles a list of all your records, and there is a history as to whether you have paid on time, not paid, stuff like that, and that sort of goes into calculating one's credit score. What a credit score essentially does is it is essentially a measure of an individual's credit worthiness, in a sense that, okay, if I as a bank or a lender lend to Anshuman, what is the likelihood that he will repay me the entire amount in time? So it's a scale. Let's say on 0 to 10, it happens to be from 0 to 900, but that's essentially what a credit score is.
Very interesting. And given the last 18-20 months of the pandemic, what has that done to credit scores, and how are you, through your platform, helping the lenders?
Yeah, I think there are two sort of aspects. One, from the credit score perspective, what the RBI did in lockdown 1, right, or COVID 1.0, essentially was to provide all consumers with the moratorium, right? What they said was that whatever is the customer status on March 15th. That status will remain fixed. So even if a customer missed a payment, because obviously the RBI, the government foresaw that there will be issues because of this lockdown, economic activity will be hurt, people's ability to repay loans might be hurt for a bit. So for 6 months, whatever your performance at the bank is will not be reported. What will be reported is what was on 15th. And after 6 months, after this turmoil, everything is ended, then only proper reporting will start. So the impact on credit scores probably wasn't as much. What has subsequently happened is obviously with COVID 2.0, from a consumer perspective, the regulator, the government have also recognized that again there is an issue, and that issue is probably hitting retail borrowers and MSME borrowers more than corporate sort of borrowers as such. So they've sort of provided for options of restructuring of loans. So if somebody has taken a loan, the bank can essentially restructure the loan and say, okay, we'll give you sort of better terms or provide you a moratorium period for 6 months, and then you sort of come back on your feet and start repaying. So from a credit score perspective, from a consumer perspective, I think, let me put it this way, from a consumer's credit score perspective, the impact probably hasn't been that much. The impact to the consumer and to the banks has been more from a, I would say, economic perspective, wherein people's ability to earn a living, a livelihood has been impacted. Therefore, their ability to repay loans has also been impacted. So that I think is the bigger sort of issue, to which effect essentially banks are also sort of realizing that there's a big sort of NPA problem that is building up. It is not obviously, it's a circumstantial issue, right? In this case, it is circumstantial. It is not willful that I've given loan to a wrong person. It just so happens that economic environment is such that even if they have the intent to pay, the ability to pay probably isn't there. And to which effect we are seeing banks increasingly sort of adopting a solution as such to treat customers more fairly, to have better sort of conversations with them. So that I think in overall nutshell is what has happened.
So, that's an interesting comment, because it's an interesting segue for my next question. And I was going to come to that the NPAs in banks have gone up, I'm told, quite significantly.
Yes.
Now, part of it may be because of the moratorium, part of maybe because of poor economic activity. How are you supporting the lenders? Other than the conversation and not breaking kneecaps?
So I think for banks, essentially how collections is structured, right? It is linearly related to the portfolio, right? So if a bank has a portfolio of, let's say, 1,000 crores worth of personal loans, then every month, and this is sort of fairly fixed across the industry, across products, across globe, about, let's say, for example, 10% of customers will miss their payment for whatever reason. If their due date was the first of the month, 10% will inevitably miss. They might be sloppy payers, or there might be genuine issues or whatever. At which point of time, to cure them, what the banks do is they have collection. The collection sort of comes into play. So they will typically have a whole bunch of telecallers, field agents who will call these customers to get the monies back in. Hey, Mr. Customer, you missed your payment. Please repay this loan or repay the EMI amount, whatever, right? Now, what typically has happened in banks and lenders across the globe, not just in India, is if you think about it, with 1,000 crore, it might be okay. I need 100 people to solve for this. That 10% will go. Out of those 10, 90% will pay, 1% will flow further, right? And you need 100 people to solve for it. Now, what has happened is that 1,000 crore portfolios may be the same, but instead of 10% going in, it's suddenly doubled or even tripled. 30% is going in. So suddenly, instead of having 100 people, you need 300 people. To scale that in a very small period of time is something which is not easy for banks. Second, it's a risk that they want to avoid at whichever cost. Because one of the things that is happening is banks are realizing, because of regulatory pressures, that collections generally, no matter what you say, it has an element of compliance element there, which does get crossed on a regular basis. And that's a risk that all the CEOs, MDs, and CROs of the bank are acknowledging. And they're saying, hey, we need to fix for this. So that's why they are sort of increasingly gravitating towards digital sort of solutions, such as ours, to say, okay, how can you come and help us fix this, right? I need to reduce my sort of collections activity as well. And I need to also ensure that it is done essentially in the most regulatorily clean way possible. So that's, I think, where we come in. So our idea from a solution perspective is you need to take the human out of the process as much as possible. Because once you have two people talking to, it's just natural tendency. The guy who's asking for money is always going to be more aggressive, no matter what you say. So as much as you can sterilize that conversation, the better outcomes you will get.
Very interesting. So my next question to you, Anshuman, is you as an entrepreneur. And the question is that, you've built a fascinating organization, which was really a bootstrapped startup into such a major powerhouse today.
Yeah.
What have been some of your challenges and what have been some of your learnings?
Tough one. I think there are multiple challenges and multiple learnings. From a business perspective, I would say, there are way too many. Couple of things. Actually, there will be more than a couple of things. But for anyone who's sort of starting out, first thing, obviously, there will always be mistakes, and you will always make mistakes, which is fine. You cannot make the right decision at every time. I think the most important thing there is to realize what the mistake is and course correct as fast as possible. That tends to happen, I think, easily when you're small, and it depends upon the sort of founders, promoters as well, that, hey, I made a mistake. Can I just sort of rectify it? Okay, fine. I've spent so much money on certain thing. It's not playing out. Let me cut my losses short, as opposed to take ego there. I think that's the first one. From a learnings, there are way too many learnings, I suppose. The other thing that I will say, which is very important if you're sort of starting a business and doing it, is live to fight another day. That is extremely important. Longevity, if you're able to survive, the longer you survive, you are able to, opportunities just open up over a period of time. And the third and the final one that I will talk about is when you're doing a business, at least this is one thing that I and my co-founder pride ourselves on, is that we always play the long odds. What that essentially means is I'm looking year down the line, 3 years down the line. I'm not looking for immediate results, right? If I was to look for immediate results, then I would have sort of changed my business model, simply said, hey, let me be another agency. Let me just, put a bunch of people there and just call boom, boom, boom and get money, and, compliance be damned, everything, money can come in. But I think to sort of be able to see and predict the future in a sense, now you will not be ever able to predict, this is something which will happen in 3 years' time. Okay, maybe it happens in 2, maybe it happens in 5. But playing those long arcs, I think, is one of the biggest and most important things that we have been able to achieve. Along with obviously saying, okay, I made a mistake, let me solve it, and you will make mistakes. And yes, saying that, okay, you have to survive to sort of ride that long arc, right? Can't be that you suddenly die.
Very interesting. So, when you, going back to Creditas, you have worked in different countries, worked with different clients in different countries.
Yes.
How is India as compared to a lot of other markets when it comes to debt collection?
Okay, debt collection, actually, I would have thought about business as well. So from a debt collection perspective, I think the market is evolving. It's still not as evolved as the US, UK, or your developed countries would be. The regulator is now what we are seeing the regulator do, and regulator has to play a big, massive part in the evolution anywhere in the world, especially for something like debt collection. Is now what we are seeing the regulator do is what we would have seen in the UK maybe 15, 20 years back. But as I said, that the regulatory winds are always unidirectional. We have seen this across the world, whether it be UK or the US. it is something which is inevitable. It's like, that's the Neo, Mr. Neo. It's the sound of inevitability. It is going to happen. Banks are now increasingly realizing that. From a business perspective, not just debt collection. That's fine.
Absolutely.
But from a business perspective, I think India is a very different market altogether.
Correct.
If you are able to do business in India, you can do business anywhere.
Well said.
Is our view, and I'm sure you've run a business as well, and you would know how different it is. There are anecdotes we can talk about, but yeah.
Thank you. So I'm now going to move, Anshuman, to a set of personal questions, because our viewers and listeners love to get to know my guest a little better.
Yes.
But my first question to you is, for someone who's doing so much great work in credit and helping so many banks, what are some of the core values you believe in?
Core values that we believe in, I think, very personal question. So from a core value perspective, personally, a couple of things that we genuinely believe in, and I'm not talking from business values, these are personal values that would translate into business as well, right? We are fairly agnostic, if not atheist, bordering atheism probably, but we do believe in karma. That is something which is very core to us. As I said, long arcs and stuff, all of that comes from that, right? Gratification and stuff. Ultimately, what you can control is your actions. And hopefully over a period of time, once you keep doing the correct actions over and over again, things tend to add up, and things sort of will lead to the correct outcomes as such. So that, I think, at a personal level is something we believe in. I think that pretty much is what we...
Fair enough. So moving on, having built an amazing startup and having had such a great career, when you look back, what does success mean to Anshuman?
Success to me means, I have, the first success is essentially, I think, and we're proud of this in a sense, that we have transformed the industry to an extent, or at least we've put the seeds of transformation there. Success is, to be honest, personally to me, yet to come, in the sense that we would like the entire industry to shift to a particular model, which we are seeing steps being taken in that direction, and sort of acceleration of that happening. So that is essentially what success would mean to us, essentially as a business. Pretty much. Very short.
Okay. And my last question.
Sort of for us also from a success perspective, I would say is, the fact that we've been able to build out a 300 plus member team and growing is also something that we look back and are very proud of. I mean, considering the fact that I and my co-founder started, our business essentially out of coffee shops, just meeting every second day, spending 5-6 hours. And then from two of us, starting from a small incubation center in IIT Delhi, in a room which was probably smaller than the room I'm sitting in, to having bootstrapped and built it out to 300 plus, is something which is, yes, a matter of pride for us, and looking to scale this further.
Fascinating. And Anshuman, my last question to you, it's a follow-up from the success question. Who or what inspires you to keep on pushing yourself to do such amazing things?
Who or what inspires me? So that's again a tough one to answer. So personally, I think what inspires me would probably be, I suppose, would be you just keep doing your stuff, I suppose. I think that's about it. And I think what the idea that I think inspires us, and personally me, is, I mean, I'm sort of a metalhead as such, right? So, and I like metal because they sort of play songs which are sort of anti-establishment in a sense. So the fact that we are trying to sort of turn an industry on its head, the way it's looking at it, is something, that's sort of a personality trait, I suppose, that business has to be done in a particular way, and we're saying, no, this is whatever has been done for the last, eons and eons. It's not the way to do it, especially with, there are better ways to get better outcomes as such, which are completely diagonal maybe, and better ways and proper ways to do it. So I think that sort of inspires us in stories of, that's about it.
Fascinating. Anshuman, thank you so much. It's been such a privilege speaking to you. Thank you for taking me down this incredible journey of Creditas.
Yeah.
Great learning for me personally, and wish you lots of success.
Thank you, Ashutosh.
Thank you.
Lovely having chatting with you.
Yeah. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.